section of Powell Corporation. Now, is Powell the parent or this child? Parent. Okay, so I'm going to prepare the parent's balance sheet equity immediately after the acquisition. So hint, prepare journal entry. Well, yeah, that's pretty important, right? Okay, so the first thing is when I read, so I'm going to go back up and look at it, and so when I'm looking at this, it seems like a lot of stuff, but right away, I need to find out what happened. Well, they issued some shares. Powell issued 300,000 of its shares with a market value of $20 for all of SIP's shares. So is this it's 100%, right? So they're definitely going to have to consolidate, right? So it's a no-brainer. They own more than 20%. And so, then SIP was dissolved. So it's one of those where, in this case, buy, dissolve. Now that's not always the case. Sometimes you may buy it and they may continue on, right? But in this case, it was a merger or acquisition or something like that. So the first thing I got to do is determine, if you look at the entry, it's a lot of stuff, but let me scroll up to the problem, might help.
Oh, yeah.
Is that better?
Yeah. I was like, what problem are you on there?
Sorry. So skip all this here first. Let's start with this. First thing is I got to figure out what is my investment in SIP. Well, what did I do? I issued 300 shares, market value of 20. So does that, I don't have a calculator, that should equal pretty close, right? That equal, how much did that come to? 600? I'm sorry, 6 million. Okay, 6 million. Okay, so is this my fair value? Okay. So I'm debiting my investment. That's what it was worth at that time. And what are we getting rid of? We're offsetting their capital. I mean, there's some capital stock. I'm sorry. We're setting up some. We're getting. We gave capital stock, right? In order, we're giving our stock away for this company. So instead of cash, we're doing stock. So you have capital stock 10 par. Now, do you guys remember what par is? Not par. Okay.
I know what a long form means.
Okay, well, par is kind of weird. I mean, it's like one of those things where when a company sets up, they just set up a value, and it used to be actually tied like the gold standard to something. But now some rules of thumb is you start low because there's some rules of why you might do that. So some you'll see it's like $1 par, but that's not really the value of the stock. But we keep separate tracks of it. It's really silly. It doesn't mean anything except for we show it that way. And so you'll notice they set up it was $10 par. So we're breaking up this is the $10 part of it, but the problem is it was worth 20, right? So the difference is going to be other paid-in capital, or I might call it additional paid-in capital, is what we're used to. It's all the same capital, right? Now, capital, is that a bad or good thing?
Good thing.
Good, right? It means it's good. It means you have equity in something. It's a revenue. I mean, sorry, it's an equity area. So we learned tonight that if it's in the equity, which is retained earnings, kind of that area, credits are good, right? That means revenue comes into there. So that means good. So we're basically getting an investment, and we have equity. We gave up some equity, but we have actually stock, capital stock. Good thing. So here's the other thing that you got to read here. It says, and also Powell, they paid $10,000 to register and issue the shares, and $20,000 for other direct costs. Okay. So there was if you read that in there, the direct cost of $20,000 was considered investment expense, but the registration was actually part of the investment kind of thing. So it actually affected capital. So you don't get to write that off, do you? I mean, that's just it's part of the kind of tied to the shares basically. And notice it's another paid capital, or I call it additional paid capital. So it's in there, and so that's where you credit cash. So the big deals you have to know, and they'll tell you in the book, but if you've got to register stock, it's tied to the common stock. It's not really an expense. But the direct costs are going to be your attorney fees, some of those type of things. That's more of a direct cost to issuing those shares. Because these big companies, they just don't decide one day they're going to throw these shares out. Look at T-Mobile and all that stuff. They had to get attorneys, right, to make sure that first of all to follow the process. And then remember there was people, remember the government got involved in it, and so they had attorneys to defend themselves. So there's cost in offering this type of stuff and merging and stuff. Okay, so that's the first thing. We got to do that first there. And then we're going to go back up. Excuse me. It wants us to say, it's asking us to do the stockholders' equity section, right? So we're going to obviously we're going to have capital stock, right? $6 million. and we have additional paid capital. So it's all that, the journaling we just did. We start with, what are the companies, if you look there, what was the company's, Powell, you start with Powell. So they had 400,000, right, or in thousands, so, yeah, 400,000 already. And then we're gonna add the 3 million that came from this entry here. And then we're gonna subtract the 10, which came from this entry, so there's your additional paid capital. So if you were to look at their balance sheet, under the equity, which remember how balance sheets work, it's an order of assets, liabilities known as equity, so it's at the very end of that sheet. This is what I would expect to see down here at the very bottom of the balance sheet. And then there you go, retained earnings. So we have $1,200. Now why the 20? Why are we subtracting? Where would that normally go? We expense 20. Where does that go? What statement does that 20,000 originally go to? Anybody? Income statement, correct. Yeah, and then at the end of the period, we close the income statement into retained earnings, right? Or income summary, and then I would just bypass income summary, go right to retained earnings. QuickBooks does that, we don't have to worry about it. They're saying in this case there was no income, so all you had was a loss, and that maybe it was the very end of the year, I don't know, but it was actually the beginning of the year, I don't know, but that's the idea, is that all they had was $20,000 loss. So there you go. Total stockholders' equity is $10,570,000. So I think the biggest thing is kind of, first of all, you need to read what they're asking us to do, because this is specific, right? And then the next thing is to try to do the journal entry, but you pretty much need to figure out what you did. Did you pay cash? Did you give up stock? I mean, what did you do to get this? You're not going to just ask for it. They're not just going to go to you. You're going to have to give up something to get something, right? So you need to know how that happened. And then I don't know how you work, but I like doing journal entries anyways. I just think it's easier to track. How many know how to do T counts? Yeah, and don't be ashamed to do T counts. Even in advanced accounting, I do them now. Sometimes I get these weird entries to clients, and I have to tee it out to make sure I understand where it's going. Sometimes I can't visualize it in my head if it's too complicated, and it works pretty good that way. So they know that was elementary accounting. You still will use T counts sometimes for complicated entries actually. So. And then they tell you actually how to check figure it if you wanted to go and figure it the back way. And this is something I'll let you read on your own. It's just a back way to check your numbers. This all mathematically adds up, right? So if you didn't do this right and you screwed it up, you could always go back and do the mathematical check and figure your way through it. But just follow the directions. It's pretty straightforward. Okay, problem 1-3.
Can you go back up for just a second?
You bet. A little further?
You're gonna send us this.
Yeah. Yeah, tonight you will have it by the time I get home. I live in Gresham, so it takes me, about 15 minutes to get home on a good night? Barring any shootings, right? A couple times, I like how it's light right now. Yeah, well, a couple times I've driven home and I watched the news and said, yeah, there was a shooting right on Division by the theater there. They had a shooting one time. They actually had someone, wheelchair flipped over. Someone died. It was right after, I guess, I had this, I feel bad. I don't know if the person, I think what happened, the person might have been a little bit intoxicated, and it